this is what we're going to do today. I decided to make it slightly different from yesterday's session after my power went off, and hopefully we'll have power for this whole hour. I live in a very rural part of California, just about 90 miles from Los Angeles. And we've had fires here, so all of the poles that hold everything up, the power poles and internet poles and all that, are subject to falling down when people bump into them, which is what happened. Anywho, so what we're going to do this time is the same topic, but I'm going to do a little more foundation behind it about what setups are and kind of what the hierarchy of setups are. So I think that will be helpful. And once again, there's contact information. I added a couple of things here. I threw my LinkedIn on. Somebody asked me for that. These are all the different ways you can get in touch if you would like to do so. All right. And of course, you know, this is educational. What you decide to do with your money is up to you. And let's pause right here for just a second. Okay. I realized after I started yesterday that some of you really didn't know me, and I was just kind of assuming you did. So those of you that do, just bear with me for a moment. I've been trading since I was 13. I will be 60 in March, so that's a lot of years, 47 years. I started out trading stocks and options with some money I got for my birthday and kind of parlayed it up to a couple $100 grand. And then I got real aggressive trading options in my 20s. And I lost most of that money. So it's a very typical story. But I learned along the way a lot about process. And that's a real common foundation to what we do here is process. And one of the things one of the things that didn't make sense to me was I've often heard conventional wisdom in the market, but what I saw in the market wasn't what everyone said was conventional wisdom, like, you know, following trends and whatnot, you know, let your winners run, just all the stuff you always hear. So in my 20s, I started literally collecting data and testing trades live, and stocks, options, and then futures in the early 80s. And so fast forward to where we are today, you know, I had a career in tech. I'm a venture capital guy, do a lot of other stuff, but trading is my passion, has always been, will be, along with teaching. And so that's what this group is all about. It's about kind of paying it forward and giving back. I think a lot of what I've learned is useful, and it's so different from what I've seen out there that I just can't help but tell everyone all about it. So that's my story. And now I'm going to pass it over to Lee and let him introduce himself and say hello.
Thanks, Jeff. So hi, everybody. My name's Lee Harris. I have order flow visualization software business called Emoji Trading, and off the side of that I also do a bit of coaching, and that's really the background how Jeff and I have come together in the trading research group. My background in trading is I was trading options and CFDs on UK equities and then ultimately futures as a kind of, you know, side gig, on and off since let me think, when did I graduate? I'm losing track. Early 1990s, that's a long time ago. I had an IT career. I ran my own businesses from the early 2000s up until about 5-6 years ago. And then divesting from one of my businesses gave me the opportunity to trade full time. I rented a desk with an educational prop firm in London for 6 months, and actually that told me I don't need to pay £1,000 a month for a desk, £600 a month for CQG integrated clients, and access the amazing leverage from this prop firm that was actually no different to what I could get on a retail account with a US broker. But it showed me there was no magic to being on the inside. So I got heavily into order flow around that time, wrote some tools for my own use, which I ended up productizing, and along the way have also worked with some really, really good clients, helping them see inside the order flow in much the same way I do. So this opportunity now has come together in a really focused educational group with Jeff is great.
All right, cool. Sorry, I was sipping coffee right at the moment you decided to wrap up. All right, so the other thing I want to just put out in front of everybody is that we are trying to craft together the educational material with the understanding that there's about half of you, at least at this point, have been through a 4-month or 3-month workshop on this material that we're talking about, or some of it anyway, and we're going much deeper now. And some of you it's brand new to. So trying to balance that in the way that we're presenting the material. If you have questions, please put them in the text. And I can see that as I'm talking. If it's one I can jump to and answer along the way, I will. I'll pause periodically to stop and take questions. But in general, I want to just kind of plow forward and get some ideas out there today instead of getting too bogged down in Q&A, because I think this will be a really good foundation for everything else that we're going to do. So without further ado, let's continue. Oh, and of course, my Zoom toolbar is playing games with me again. Okay, so just a little bit of language. I want to make sure that we're all saying the same terms. A playbook in the vernacular we use here is simply a collection of trades at a given time of day following certain setups. And filters are something new that I'm introducing in this session. The Motleys and the workshop people have not heard this in detail yet. So that's what this was originally about, and we're kind of stretching it out a bit. So a filter is basically a way of looking at a setup and saying, okay, under what conditions can I improve that setup? And so that's kind of what we're going to be talking about today. What is a good setup? I'm going to go through that to kind of define again. Your purpose as a trader should be to find your Bubba, and that's another thing you'll hear us say here a lot. And basically, that means just find your niche, find the best spot for all of the elements of you, your personality, the markets you can trade, where you live, what times of day you can trade, all that stuff. So a setup is simply a condition you see over and over again, and we're going to go through what you should be looking for, because you may take one of mine and make it into yours. In fact, I hope that's what you do, because a lot of people think that the way you make money in trading is you go buy memberships and people sell you indicators, or or you go in a room and they call trade levels, oh, we should be buying 3250. That's complete and total nonsense, everybody. I mean, if you haven't figured that out already, seeing what's going on in the education space, go spend some money and check out those kinds of groups. That's really what they're all about. And it's not a consistent way to do anything. It's really just selling hype. So that's not what we do. You're not going to hear us talking about indicators, indicating trades, because that's not how a good trader works. A trader looks at the conditions in the market and then goes and looks at setups for those conditions, which is exactly the opposite of trading when the XYZ crosses the XYO, or we're at the SR2 support level, or any of that stuff. That stuff is just all really nonsense. Nonsense in the sense that if you can make it into a setup, that's different. But those things in and of themselves are just nothing more than metrics. So we'll go into that in a lot more detail and help you figure it out. What is a filter? I'm going to show you a bunch of those, because the idea here is, okay, you have a playbook of setups you see regularly that you execute at certain times of the day. And one of the things that started happening in the workshop toward the third month was people were saying, I really like this opening 5A, but there's sometimes I'm just totally on the wrong side of it. How do I improve? How do I get better? Bingo, the answer is filters. You find, or rules, sometimes people call them, but I like filters better because of the mathematical implications of that. Okay, and then how can we make a setup better with a filter? Well, that's why we're here. So that's what this session is about. I am going to show you a setup that we talk a lot about, the first hour high and low. I'm going to go into that in a lot of detail. I am going to go back and explain kind of a little bit backwards what exactly that setup is about, because I realized yesterday we skipped over that a little bit. And so we'll do that. Okay, so that's what's up today. That's our plan. All right, let's just review one really, really key point. If you want to be a consistently profitable trader, there's really only one thing you've got to pull off, and it's this right here. You have to consistently take a set of plays. I mean, just like you're playing football or baseball or soccer or any other sport, you do the same things, you do them really well, you practice them tens of thousands of times. In setups, you execute really well. That's where the practice comes in handy. You give yourself feedback. You get feedback from other traders. You improve over and over again. You just loop through this. That is how you do this business. It's really that simple. So we're going to focus primarily on setups, but I wanted you to just understand where that kind of fit together. Okay, so what makes a good setup, and why is the first hour high-low such a good setup? All right, well, let's talk about that. It has to be consistent. Consistent means nothing more than that. I just want to see it do what I expect it to do over and over again. So if it gets to a certain inflection point within that pattern, that range, that initial balance of the first hour, and again, I'll elaborate on that in a minute. I expect it to do certain things, to behave a certain way. And that's what's so different from kind of indicator-based trading. People trading off indicators see, you know, this crosses that and it's a long. But unless you know what's going on under the covers as it's crossing, you can't say that. It could be the perfect short setup because it looks like a long to the technical traders. And that's exactly why order flow has got to be the most important thing you do. So in a good setup, you want to see consistent behavior. And obviously you want to see it repeat frequently enough to be useful. First hour high and lows occur every day, you know, sort of by definition. And across the markets that we trade, you know, the ES, NQ, CL, GC, there's at least 4 or 5 of these trades every day. So you can easily just do this and make a really nice living. The one I did this morning with a 3 lot was $2,400 and change. So, you know, and it took what, 30 minutes? That was an opening 5 HMOMO trade. I'll talk about that in a second. Okay, so this point I made yesterday, and a lot of people scratched their heads when I was making it. So I'm just going to make the next 2 points really simple. Risk and reward is not about ratios. You'll hear that all the time. And again, that's one of those conventional wisdom stories that, you know, you shouldn't take a trade unless it has a, you know, 3.6 R to R. Nonsense. You should take a trade if you can make money with the trade. Reward and risk should be clear. For me, that's about where's the stop, and that's all it's about. So if I'm taking a trade, I want to know where I exit if I am wrong. Nothing else matters. Okay, and you're going to hear me say things sometimes like that, you know, really with a lot of authority, and you know, change my mind. And that's exactly why I'm doing that. I've been doing this a really long time. I've seen a lot of BS. I've purchased a lot of BS. And I know what works and what doesn't work. And I know when it's working for me and when it's not working for me. And I can see it in other traders. So that's what you're hearing when I say that. And if you can prove me wrong and you have something new, by all means, bring it to the group. That is why we are here. But, you know, don't tell me that you've got this perfect MACD crossing over RSI trading system, you know, because that's a system for trading one market under one set of conditions, like trend market. You know, people tell me how much money they made in the last 8 years. Well, how could you not make money? The market's been on the biggest bull run in history. All you had to do was buy a dip. But if you think that's going to work going forward, you're sadly mistaken. Markets just don't do that. And right now we're seeing it. We're seeing a lot of chop come into the market. So next point really quick again, because this was a little confusing yesterday. It'll make more sense over time. You have to understand there's kind of a blend or an art to the low win rate, high reward, or high win rate, low reward game. For me, it's about my mental state. One of them is a scalping approach, high win rate, low reward. You know, if I can get a tick in the ES, once I pay commissions, I still have $9. That's a good deal. I'll take it. That scales perfectly. I could do that with 10 contracts or 100 contracts. So that is a really good risk reward situation right there. Now, if I want to trade for bigger swings, kind of like this morning's trade, I wasn't looking to just scalp out of that. I was looking to just have it work with a real nice payoff. Turned out it did. So the win rate was 100%, but those generally don't pay off like that. You know, you have to really, really get your execution tight to get that good. So anyway, the point I'm making here, just to sum it up, is that understand when you see people saying, you know, that you can be profitable with a 40% win rate. That's true. But that's a certain style of trading, like that's intraday swing, maybe taking a couple of trades, letting them go against you more than I would, that kind of thing. Whereas high win rate, low reward, that's scalping, where you know you go in and you just make some money and get right back out. Your default position is you're not in the market, so you have no risk. I think that, well, that's my bread and butter. So I tend to lean that way. And one of the nice things about Lee and I's synergy is that he goes the other direction. So this is a nice blend. The reason it's on this slide is that it's pertinent to every trade setup, that your mind is not in the idea that, well, you know, I'm going to put on a 2 lot and then I'm going to take one off and leave a runner. That is the absolute worst kind of psychology you can have, because you're trying to do 2 different things at the same time. So yeah, I know that language there was, well, AM, FM, AC, DC. No, we don't do that. Okay, so Um, it's really hard to switch from a scalping mentality to a swing trade mentality. So don't get caught in doing that. Have your setups either do one or the other, and we'll talk a lot more about that. And again, it's just about exits and potential targets being clear. And I'm not a big guy about looking for targets. I kind of let the market give me whatever it feels like giving me at the moment. Sometimes it's a lot, sometimes it's a tick. You know, you gotta be flexible. Okay, next, level down. So we talked a little bit about setups. I'm going to give you examples in just a minute. This is just kind of the, you know, if you went to a university or had any kind of formal education, this is kind of like what we're going to talk about, and then I'm going to dive in and do it. So some ways you can filter a setup. Time of day, that's the most logical one. You know, things that work in the opening 5 minutes don't work particularly well at midnight. Um, by the way, whenever I talk about the opening 5 minutes or the opening hour or the first hour, I'm always talking about regular trading hours of the New York Stock Exchange, 9:30 Eastern Time, 6:30 Pacific Time. Convert to your own time zone. Yeah, the Chicago market is an hour before that, you know, whatever. To standardize, I just use Pacific Time. You know, add 3 hours for Eastern, but that's what we're talking about, the opening of the regular session for the New York Stock Exchange. And the reason we're talking about that is because that's when the volume happens, and I'll come back to that. So time of day, one of the best filters is time of day. Trend, ooh, really good one. Trend is a great filter, but one of the also conventional wisdom points that's just completely misleading is the trend is your friend. By the way, when I do that voice, that's Jeff's Furu voice, because I'm trying to illustrate that that's a meaningless thing. The trend is your friend. There's nothing more meaningless than that statement. What time frame are we talking about? To have a trend, we need a time frame. And you know, if I'm trading on a 10-second chart, trends are pretty obvious because just by mathematical definition, the faster you go on a chart, the purer the trend's going to be. Literally by definition. But if I'm looking at a chart that's, you know, 6 months, well, there's all kinds of pullback, consolidation, activity going on a chart like that. So you can't say there's any sort of trend on there other than a really, really big picture view, which as a trader isn't very useful. So be very careful of using that term. The way we qualify that here is we call it the immediate trend. So, you know, quick example, here's an ES chart, 10 seconds, the immediate trend is down, okay? But if I look at that on a 5-minute chart, we're not going anywhere. There is no trend. That's why trends are useless. Only use the concept of a trend when you're talking about a very, very, very short-term time frame. And then it makes an excellent filter, particularly for setups like the Open 5B and the first hour high and low. All right, metrics. There's a lot of good metrics out there that can be useful for all kinds of things within a trade setup. Don't confuse metrics and indicators. They're not the same thing. A metric would be like measuring momentum with an indicator. The thing that the indicator is outputting is the metric. What is momentum right now? That sometimes can be useful, but be very careful trying to build a setup based on that, because you're starting from the wrong end of the equation again. You're going from the result and trying to build what's going to happen based on that result, and that doesn't work that way. That's why technical indicator-based trading is simply not a long-term endeavor. It doesn't work over time. Yes, you can use technical indicators within a lot of other contexts, but you can't just say, I'm going to go long when this or that crosses. So be very careful of these terms. And again, we're trying really hard to avoid terms in general. Context is a great filter. And, you know, the way you look at that is just what's just going on overall. You know, right now, what's going on is we have price discovery. You know, there's a lot of nervousness in the markets, impeachment, viruses, you know, all kinds of stuff. So the context is going to be, wow, it's choppy, it's volatile. So, you know, lower size, give yourself more room. You know, that's the kind of thing you're thinking when you're filtering a setup. And then again, I mentioned, you know, the way that I divide up the mental of am I trading, scalping, or waiting is I literally have a mode for myself. And I say, okay, right now I'm scalping and that's what I'm doing. And I'm not going to think about runners. If I get one, great. But every trade is a scalp until it proves otherwise. Okay. Now, let's go look at some examples of this stuff. Hang on, I've got Zoom jumping around on me once again. Okay, there we go. So here's some examples of all those different terms that I just used. When I refer to setups, these are kind of the base terms over here on the left of this slide. Can you guys see my mouse pointer okay? I tried to make it bigger and change colors because I know it was disappearing yesterday. Is that, should be like a white arrow? Yes, no, anybody? Yes, okay, cool. So this is the setup. So that's kind of the things we're looking for based on market conditions. And remember, we don't start with the setup, we start with the market conditions, and then we go backwards, and then we find setups within those market conditions. And I like to put them into context. And again, I'm not going to go into what everything on this picture and every line here is. We don't have time for that. This is just an overview to get us understanding what we're talking about from first hour, high and low, so that we can go look at filters. And I will come back to everything on here over the next weeks, I promise. But basically what you're looking for is to establish an understanding of the context of the market, understand what it's doing intraday and how good a job it's doing it, which way is it going, is it consolidating, et cetera, et cetera. And then based on the time of day, there's one filter right there. The session, kind of a filter related to the time of day. So regular trading hours, we're kind of right in here right now, right? It's, let's see, in my time zone, it is exactly 9:23:23. So we're right here. So this playbook is saying, okay, for the instruments you're trading right now, Jeff, we want to be looking at first hour highs and lows and the opening 5B. So that's a part of this setup. It's actually, the setup has a couple of parts, and it is one of the ways that this setup here manifests itself. So that is what we are talking about. That's what processes this entire thing. It's the methodical way that I approach the market to extract money from the market with as little risk as possible and being in the market as the least amount of time as possible, because if I'm not in the market, I can't lose money. That's what a purpose of a process is. This is mine. I literally do this every single day. These are the trade setups that I execute against based on what's going on in the market. And these are some ways that I filter them or adjust them. For example, at the open, I'm very mindful of chop. I'm looking for correlation among the indexes. I'm careful to stay out of the way of sweeps if I'm seeing them. Volatility, volume, are there gaps? What's the internals doing? These are all ways of filtering this setup to make it better. And I've been able to get it down. For example, I just went yesterday to look because Lee and I had been talking about it. My Open 5A, in other words, this setup, combined with HMOMO, and very often the setups will combine together. In my database, okay, you ready for this? I have about 160,000 trades, and the win rate on those trades is approximately 87%, give or take. And the average profit across every single one of those is about 30 bucks. So that's the result that I get out of this using this process. Now, that's not the only thing I do. That's just one of the things I do. But that's not back testing. That's not some theory. That's literal results. Real money, real accounts traded live over the last 15 years. That's how you build yourself a process and a playbook. Now, yours and mine will be different, but our purpose here is to show you a bunch of examples of working setups and then have you guys use what you can and make them your own. And that's kind of what the Motleys and the workshop people have been doing for the last 2 or 3 months. So that's in a nutshell that. I'm going to pause there for just a second, and I'm going to jump over here to the Slack. And I just wanted to point out to you guys, because I know the Slack can look a little overwhelming if you're just joining us. That's what these over here on the left, where it says like setups, JM is me, setups, LH is that other guy. What's his name? Lee, that's right, yeah. Sorry, Lee, I'm kidding. And then, for example, we're talking about first hour high and low. So there's that one right there. And here's an example of it that I posted for you. So let's go through this example, okay? And this is exactly where my power went off yesterday. So hopefully that's not going to happen today. If you believe in knocking on wood or whatever, do that. And we'll blow this up a little bit. Rather than looking at a live chart, it's real easy to work with this. So this was the setup. This was an oil on the 23rd. And you could see, you know, oil opened and the quote unquote pit opening of oil is 6 a.m. on my time. And but I generally track everything by the opening of New York, 6:30. So basically, it opened up. It kind of drifted down into the open, and then it did this kind of shimmy here, and then this was the bottom. So that opening range, 60 minutes, in other words the first hour, that was the low. This is just a tool you can get. I have it posted in the groups. This particular one, it's just an opening range indicator. It posts the actual data. This isn't predicting anything. This isn't, when it gets there, I'm going to trade it. Some of you are confused by that. We have to wait till it's established. This is literally the high point of the first hour, and that's literally the low point of the first hour as it happened. It didn't draw these lines before we got there. It drew them as it happened. So it's uncanny how frequently you'll see this. Literally to the tick, that's the high of the morning or the day. And literally to the tick, it's the low of whatever the morning or the day as well. And that's what happened here on the 23rd. It drifted down there, and then it kind of poked around for a little while. And on a 3-minute chart, we really don't get an understanding of what happened down here. That's why you really need order flow, and you need footprint charts, and you need the domes, so you can really see what's happening and see if in fact the selling is ending and buyers are coming in. The delta down here showed that, but it didn't really show it until we got over here. You can see these green bars, and that's because it's a 3-minute chart, and that's just way too slow to trade, guys. People say, well, I trade on a 15-minute chart. You're missing everything. Okay, so let me show you what I mean. This is what that looked like on a 30-second view. And you can see it's a lot more informative. It touched that low twice. It got bought down there. It tried to go through it again, and it couldn't. You can see there's like a tick or two away. It didn't quite get there. And look at the volumes. This is called wave volume. And again, that's a tool you can get anywhere. It's price action swing. I posted it in the groups. And it just shows you the relative aggression. So the aggression coming down was pretty high. And then we bounced on a decent amount of volume. We tried to come back on a pretty aggressive volume, almost half of that. Couldn't sell through there. So then you could see the buyers just came in and much more aggressively than the pullback swings were. So that's a perfect example of what it looks like to buy the first hour low. And the filters you're looking at here are the wave volume and the deltas. And it's really clear that the people trading the trend were about to get burned really badly. Imagine the guy, oh, I'm going to wait for a pullback and get short again. That's exactly why this works, guys. Because the conventional wisdom is to get short on the pullback of the trend. There's that Furu voice again. I'm trying to illustrate that that's just complete and total nonsense. Unless you really understand what's happening right here, the fact that we trended down to there couldn't be less relevant. In fact, it's almost designed to mislead you into selling that point. So I'm saying that as aggressively as I am because it's really that true. Okay, so let's go and look at a footprint view of that. And this is a 12 range footprint. I have a few different levels of footprints that I look at. And I mostly watch this on the dome anyway, but here you can see exactly where the turn was. And this is the delta here, and these are imbalances. These pinks, the blues are buy side imbalances. So basically selling imbalances, sales side delta, selling imbalances. Then we come back down here, and all of a sudden everything changes. Buyers come in, they turn that around, and then you can see the attempts to sell through there failing. So the idea long was, this might have been a little premature, but certainly right here, boy, and look where that is, 54.75. I mean, the market was telegraphing to you that it was going to turn here. You can see it by the buy volume picking up. You can see it by the delta turning positive. You can see it by the sell volume dying off. You can see it by the delta improving. There's a lot of ways you can take that information and make that call. But the point is, if you were just looking at a candlestick of a 5-minute or whatever, you were completely on the wrong side of the market, and you probably lost money. So, so that's one really simple example of how you could use the first hour high and low. And by the way, I'm using the examples in the Slack so you can go back and see them and say, oh yeah, I get what he was saying, rather than just pulling up random examples. I mean, this literally happened today too. So, I mean, you can do this almost every day. So like, here's today, and there's the first hour high on the ES. And, sometimes it does a little head faking. So like, here's today, and you can say the top you know, respected it, but down at the bottom, it, you know, it really tried to test it. And that's indicative of price discovery. In other words, that's nervousness in the markets. The sellers and the buyers are negotiating to see who's going to win. That's really what's happening. So here's another good example. If you go in on this 3-minute chart, the trend up until this point had been way strong up. If you go back and look on the 22nd, we were up like 60 or 70 NQ points. And then we slammed into the first hour high and we just kind of bounced around up there. And again, this was one of those really great shorts that was totally against the trend if you were quote unquote trying to trade the trend. And without really zooming in on that, again, the minute chart wouldn't have really showed you that trade till it was over and, you know, this cascade down when you really wanted to be getting short up in here. So there's another example in gold. So they literally occur all the time, guys. Here's a bunch for gold. Here's an example. This was the one this morning, wasn't it? Let's see. Yes, I believe it was. Hold on. What day is this? Sorry. Yesterday. That was yesterday. So there's another example. So I don't want to just bore you with lots of examples. I want to just make the point that there's one or two types of setups that we have among the ones we talk about, at least my half of them, not Lee's. I'll let him speak to his, but this one, the first hour high and low, as well as the spring and up thrust setups, if you just want to learn one and you were looking for a setup to make a living with, I would choose one of those two. Those are the two that are just so consistent that it's hard to be wrong. So I'm going to put this back up and then I'm going to pause and take questions. Can I show first hour CL times? Okay, you mean on my current day? That's these guys right here. And again, I'm not using the pit first hour for oil. I know a lot of people, oil opens at 6 a.m., Jeff, not 6:30. True, I traded it in the pit, I get it. I'm using the New York Stock Exchange regular trading hours as the definition for the open on any heavily traded instrument. Anita, I hope that answers your question. If not, please clarify it in the text there and I will take another shot. All right, so I'm pausing for other questions here pertaining to everything I've covered up until this point. So what I'd like to understand is if you guys are keeping up here. You know, there's a playbook and the playbook has setups in it and you can use filters to improve the likelihood that those setups are going to work for you. And of course, you have to put setups into context, and that's why we have a process. So that is what we are all about here. And the only subtle differences are people trade different setups. Lee has different setups, although he trades some of these too. And that's how we collaborate. So that was, okay, good, Lee. Yeah, Anita, I see. Okay, so I answered your question. Yeah, that's a really common confusion. And oil, all right, so for those of you not following this oil conversation, oil, if you ever traded oil back 10 years ago, 15 years ago, 20 years ago, and I traded it 30 years ago, the oil pit used to open at a half an hour before the New York Exchange. And that was a really great time to trade, that half hour. It was very aggressive, lots of order flow. And Anita, to answer your question again from the Jeff, the Jeff School of Math, I used to do that. I used to have them on separate charts, and I used that opening first hour starting at 6, not 6:30. And then I went back and I just compared the results from that and the metrics from that with using 6:30, which was just easier, particularly if I was teaching it. And I did that comparison about 18 months ago. And it blew my mind to learn that using 6:30 was more accurate than using the old pit open. So that's the long answer to your question. But guys, always feel free to ask questions like that and try to put them into context so that I can answer them for what the question you're asking is. Because, again, in 47 years, I've been around a long time. And so I could be answering a question from something completely different than what you're really asking me, just because it's another layer of that element. So, all right. Still pausing for questions here and seeing none. Everybody gets this? Totally? Really? Okay, cool. Let's move on. Don't worry, this won't be the last time you see this document. We do it a lot. So first hour high and low setup. I want to talk a little bit more about why the first hour high and low does what it does. Because I think I just proved to you that it works. If you know, and if you don't believe me, it's my Furu voice again. I mean, there's just a few examples here, but if you'd like, I have a folder with several 100,000 examples in it. I could zip it up and send it to you. I mean, literally just pick a day, pick an instrument, you know. Here's gold, you know, here's a short off the first hour low. It's that straightforward. And you know, just look how aggressively that got sold. I mean, so, you know, if you were cruising along here watching this for a long and this kind of selling energy came into it, you know, there's your perfect, you know, they sold it, they tried to bounce, your perfect sell the selling energy short and then just write it down. And like I said, these happen every day. Okay, so let's define what this really means. What is the first hour high and low, and why does it do that? And this goes back to market theory. And again, all this stuff is in the Slack. But one of the things you should take a look at, if you don't understand the market profile, these two books here, Markets in Profile and Mind Over Markets, will help you understand the terms initial balance, opening range, first hour high and low, and why they are relevant. I am not going to explain that in that depth right now. It's just not possible. But what I will tell you, again, you know, Jeff's point of view is always going to be about what's really happening. Who are the traders? Why are they doing what they're doing? Why is it happening? You know, the math is great and I'm real good at the math, but the reality is, you know, markets are people, it's psychology. So you really need to understand the psychology, and there's some action right now. So, by the way, I'm going to leave my domes up here, but just so you can see what I'm seeing on my fast, you know, this kind of time frame really exaggerates nicely a move like this. So you can kind of decide how to play. Oh, I don't want to waste too much time here, but I'm really tempted to jump in here and and throw on some trades and let you guys see some live trades. I do that, guys. I don't do it all the time. And I probably don't have the bandwidth to do it right now. I see my feed is slowing down, so let's not get distracted by it. Okay, so I'm seeing some questions. Works almost every day. No, it does nothing to do with the breakout, Anita, and we will clarify, but it's not about the breakout. No. Okay. So going back, this is a real good reference for understanding this concept. But what I want to do is I want to tell you a little bit about it from just psychology. Just, you know, what are people thinking? And why is it happening? So here's just really the nuts and bolts about this. And all you really need to understand about this, don't get so deep into terms. Just think about what's happening. Okay, so it's overnight. And one of the things I do on all of my charts is I run the overnight session separately. So this is the Globex overnight session. This was the close right here. Let me put on my crosshairs. Okay, so this is the close yesterday, right here. And then this is the overnight right here. I run them as separate sessions. This line up here is just showing the high of the previous session. This line right here is showing the low of the previous session. So there and there. That's the volume profile for the overnight. This is the delta down here. That's all that we're looking at. Now, the reason the first hour high and low setup works is real simple. The overnight is low volume and institutions generally don't trade. And if they do trade, they trade light simply because the volume is so light. They can't trade anything but light. I mean, if I'm a 1,000 lot trader, I can't just come in and scalp the market overnight. It's not liquid enough. If you don't understand what that means, we will get to more depth on that when we talk about order flow. But basically, there's no inventory to sell you, is what that means. Now, that whole dynamic changed the minute New York opens. Why does it change? It's very simple, okay? ES is a derivative. This is the S&P 500 futures contract. That is a derivative of the S&P 500 index, which itself is a derivative of the 500 stocks in the S&P index, you know, which you can always go over to the S&P 500 and see what those are. So for example, there they are. So those are all the things that actually have value, Microsoft, Apple, whatever. If you throw them all together in an index that's nothing more than a derivative, you have the S&P 500. If you take that index, the S&P 500, and you create a futures contract on it, you have the ES. So that's the other reason that overnights aren't very aggressive, is because we have nothing to measure it against. We don't know what value is because the things that are in the ES are not trading because the market's closed. But the minute regular trading opens, that all changes. And that's why you see aggression, for example, like you saw here in the morning, where buyers just come rushing in. For whatever reason, that's where the big traders were this morning, and that's what happened. So the first hour is significant only because it shows you the intentions of the larger players. They have to show their hand when the market opens, because they can't show it overnight because they can't really trade, and that's all there is to it. So if you go to like a 30-second time frame, you can see that really visually. I mean, it jumps right off your chart, and that's the point I'm trying to make here. So give me a second to refresh this chart up to 30 seconds, and then we'll have a look at the exact same chunk of time. Okay, here we go. So again, this is why I tell you over and over and over again that even a 30-second chart is useless. If you're not trading on the DOM, you wouldn't see this happening. It would be going so fast you wouldn't be able to keep track of it. But on the DOM, it's real easy to see. Why? Because on the DOM, and the DOM I'm referring to this guy right here, because I can see when we have a move like that happening, that it just keeps getting lifted up or it keeps getting pushed down if it's going the other way. Right now, we're not going any direction. So that's why we're seeing this kind of consolidation shimmy, the consolidation shuffle, a lot of traders like to call it. Worst time to ever trade is when we're consolidating, because you have no idea what's really going on. Everybody's kind of temporarily agreed on the price. But that certainly was not the case when let's go back out to a really fast interval, and you can see, if you're looking at this as it's happening, it's not hard to understand which side of the tape the volume is on and the aggression is on, and that's what this is all about. And you just don't see that overnight. You see it the second the market opens. That's the open 5A, and we'll talk about that one in another session. But this one's about the first hour high and low, and here you can see, look how aggressively. So now you can see the ebb and the flow a little bit there. You got to go to 10 seconds to see it, but there it is. Low volume pullback, aggressive move up. Low volume pullback, aggressive move up. There it is, but you got to get a 10-second chart out to see it. That's why charts are useless. That's why inflection points are critical. Here's the first hour low, and you can see it getting bought. And that's why even better than a 10-second chart would be to zoom on in to something like a footprint. And Lee's going to dive into a lot more about microstructure on Saturday. And I personally am looking forward to that session because he knows his stuff there. But here's another good example of it, guys. Let's see, here we go. I don't have the, you know what, let me grab the one that does. Hold on, I do have one of these with the first hour high and low marked on it. Here we go. Okay, so this will make it easier to see that. So here's the first hour low today and the first hour high, and it's a pretty big chart, a 25 range chart, but you can see how, it got sold up here really definitively, and you could see that, footprint was certainly one way to do it. The DOM, basically a collection of footprints if you're using Jigsaw. And when it flew through it here, this was the first hour low today, and you can see it actually traded down through that into an older inflection area or an older support level. Be careful using that term. We like inflection area. And then it kind of got bought, but there's no follow through. So, the footprint right now is telling you that we had a very aggressive price discovery session at the open, and now everybody's probably just exhausted. I don't think they agree on price. I think they're just burned out. See, now that's what aggression looks like when you're on the DOM. You don't need a chart to see that. It just goes zipping down, and you just have to join it at an opportune point. And that's what HMOMO is all about. That's our HMOMO setup. All right, we're about 45 minutes in here, and I want to leave lots of time for explanations and elaborations and stuff. So let's zip back out here to the PowerPoint for just a minute. So that's the first hour high and low. It's simply once the market truly opens, regular trading opens, we get to see how aggressive and in which direction the big traders are going. And this is us, guys. I think I posted this thing here. Hang on, this is sorry, I'm just having a little fun, but I think you'll get it, so if you just bear with me. I made this thing a couple of years ago. This right here, this is us, okay? Not where it says me, that's all of us. We're just riding the shark around and letting it take big chunks out of the market and hoping we can, grab a few tidbits as they flow by in the water. That's really the strategy you have to have. And I'm a pretty big trader sometimes. Don't get me wrong. When I say, the big boys, I'm talking about Goldman. But yeah, certainly in different times of my career, I've traded 100 lots. I will occasionally trade 30 to 50 now. My bread and butter is one lots. I like to one lot scalp. And, I might take a one lot scalp up to 10 lots, but if you can make money doing that, why take more risk, right? Okay, I see some questions here. Bar, thank you and welcome. Bar is one of our Motleys. So I'm going to point out Motleys by name as we go, if you guys are cool with that, because some of the others can use you guys kind of as upperclassmen to ask questions of. So Bar, my question is, how the first hour high and low are not always exact to turn 30 on the time chart? Okay, that again has to do with what type of chart you're looking at. If you looked at it on a 10-second chart, it would always be precise. On a range chart, because the bar is being drawn by the range and not by time, that's why. So it just will never be precise on anything but a tick or a time chart. Do you understand the answer, Bar? Are you still here? I see the question. Yeah, I see you're still here. All right, well, I'll let you address that and I'll move on to Anita's question. Am I going to explain setups about that later? Yeah, we're going to add other videos, Maria. That is true. Anita, did you post that before I just did that explanation? Is that an old post or did you just post that? Okay, I have two questions for the audience that they're not answering. Bar, did I answer your question? Number one. Anita, do you still have this question? Okay, let me try to take that up privately with you at another time. All right, I'm not teaching the setup right now. What I'm trying to do is just use it as an explanation. We will go way deep into the setup. For right now, just look at the opening first hour range, literally. What's the high of the first hour and what's the low of the first hour on any instrument? Just pick it. Here's oil. And just say, okay. And there's the first hour, and it was to the tick, the high of the day so far. So that's the setup right there. And don't worry, no, I'm not being impatient with you at all. I'm not, don't misunderstand me. What you're hearing in my voice is you're trying to read more into this than there is. One of the things about my setups is they're extraordinarily simple. That doesn't mean they're easy to do. But you're not going to find this 15 steps and you need to buy, an indicator that costs $3,000 from me to do it. We don't work that way. It's a really simple concept. Give it time. That's all I can ask you. Give it time. Okay? All right, Bar, I will just, you know what, let's just use this right here. Okay, let's just use, and I understand the question. Let me elaborate the question so everybody gets. Okay, good, thank you, Anita. Okay, what Bar is asking me is how come the first hour doesn't look right on some charts? It doesn't actually occur at the first hour. And the answer has to do with chart construction, and you may need to go to chart school on stockcharts.com or something, Bar, and understand this. A range chart does not show prices by time. It shows ranges of movement, and the bars don't get redrawn unless the price changes. It has absolutely nothing to do with time. Okay, so that's really a critical point. Whereas a chart that is time-based, or even one that is tick-based, will be precise for those first hour highs and lows. So here's an example. If you look at this, this is 10 seconds, okay? So the first hour will get drawn based on the high of the first hour. So that's what draws this bar. And you can see that's why to the tick, it nails it on a 10-second chart, because literally it was occurred in a very short time frame. If this was a range chart, it might draw a box above and below that because it's not plotting time, it's plotting range. That's the answer to your question. Again, charts built on price levels like Heikin Ishii or any chart that is not time or tick based, the boundaries of a first hour high and low may not propagate properly. And that's one of the reasons I don't really use them much on those charts. But, for example, if you go out to the other range view that I use, which is the one that I use to look at the instruments over a few days, that range view there, again, it draws them, but they're not going to be precise because the time frame, the data series of this chart is based on 12 tick ranges. So these bars that it's drawing are 12 tick range bars. They have nothing to do with the time of day. Same thing with Renko. Yes, Maria, that's absolutely correct. So if you're struggling with this concept, what I would suggest you do, this is not a concept really in the workshop, but it's just understanding how charts work. And there's some really good explanations of chart types on this site. And again, I'm not talking down to you. I'm just suggesting this is a good way to increase your knowledge. Go to stockcharts.com. They have a really cool little thing called Chart School. And you can go in there and to your heart's content, learn about the different types. And this will make more sense to you. Okay, other questions? Good, Bar, thank you. I was hoping that would make some sense. All right, so let me see where we are in our presentation. Good, okay, I just want to go back to the agenda. Yeah, okay, we've covered the agenda stuff. So, you know, I want to make really clear, you know, some of you are new and you're only hearing my voice for the first couple of times. I'm not impatient with you at all, Anita. What I'm asking you to understand is that like anything that, you know, you go to medical school, you know, I've tutored a lot of doctors in coaching trading. And they're the worst traders on the planet. You know why? Because they have 12 years of education before they touch a patient other than, you know, as a resident. And then they have 10 or 20 more years perfecting their medicine. And, you know, then in their 40s, they become a good doctor. And I think most doctors would agree with that statement. But then they come out, you know, they retire and they got a few $1 million and they think they can learn how to trade in a week. And no, this is harder than medicine because there's so many emotions involved. So, you know, you're not going to learn it in 1 second. That's you, Andre, I think, because does anybody else not have sound? Sound back, okay. Not sure what happened there. I'm going to close some stuff. Maybe we're having a bandwidth problem. All right, so anyway, so I really want to, good. I really want to make that point that you know, please understand the concepts we're teaching aren't complicated. And any of the Motleys or workshop people here can share their experience with you. And there's a bunch of experiences shared on Facebook. But don't think you're going to just come in here and understand in 1 day. You know, that would kind of be a slap in the face of all the people that are learning for the 3 or 4 months, because it's just not that. It's really simple, but, you know, give yourself time to learn it. That's where I'm coming from. Okay, and I promise you will. You know, you'll get it. The other thing is really be a tabula rasa. You know, look that term up on Google, tabula rasa. Try to be a blank slate. Forget what you think you already know, because again, the guys in the workshop will attest to this. Those things will probably mislead you and prevent you from learning what you need to learn here. Okay, so right now we are testing the first hour low in the ES, and you can see right here, we're dancing around it. And this is a great trade because as long as it stays right around there, there's no trade. But if it leaves aggressively, you want to be on that side of the market. And that's really how simple it is. So, you know, if we go back out to 30 seconds, and, you know, just for fun, let's see if we have an immediate trend that's workable. I don't think we do, but I want to zoom out a bit. Now, see, now a trend trader would tell you this is a downtrend. And a volume profile or market profile trader would tell you how completely nuts that trend trader is because he's missing the point. The market's consolidating. Now it might be starting to break to the downside, so this could be an interesting setup again, like I said. So let's watch it on the dome. Here it is. Anywho, all right, other questions about any of the material today? I'm going to go back over it and review. Yeah, David, that's a really good point. Struggling with emotions, but again, you know, I'll share with you. I'll share a little bit about you with the group if you don't mind, and I'm not going to give you a chance to answer since I'm mentoring you. David is 20 and he's learning this stuff, and you know, imagine how good a trader he's going to be when he's half my age, 10 years from now. So if you're still struggling now, welcome to trading. You know, this is hard. This is really hard. Learning to manage yourself, particularly as a 20-year-old, is hard altogether. You know, just think about that. You know, if you're in a relationship with one good-looking guy or good-looking girl, whatever type you are, and one walks by that's the other flavor and you're 20, you know, your hormones make you look. You learn not to, but it's trading is no different. It's about fear and greed. That's all it is. That's why this works, by the way. That's why these first hour and high and lows work so well. Why was this such a perfect short today right here? Because all the people that chase this long up here, listen carefully, guys, I'm giving you a golden tip. The reason that this first hour high was such a great short was because of all the rookie traders that chased this long up and didn't make money in it. So on any sort of pullback, they got long and then they got crushed. That's what happened. Just think about that. And the chart shows you the story. You just have to look at it. But if you really want to make money doing this, charts aren't going to be helpful. What will be helpful is seeing the actual action, watching the aggression of the traders. And that's why we watch. That's why this is my main screen and I trade off the dome. Because I don't really care what the chart tells me. That's history. I want to see it happening live. Like right now, I'm seeing a little tiny bit of aggression into a high volume support node. So this will be real interesting to see if they can push down through here. Because if they can and they can get it down here, look out below. That's where the short really will become a good trade. Right now, you know, remember what I said, what's your exit? So if you were trying to short this here, where are you going to exit if you're wrong? There's no logical place to put it. So there's just not a good trade here. So even though you might have a setup, you don't always have a good trade. All right, so let's see what other questions I have. I saved you from that long because of that first hour high-low setup. Thank you, Kevin. That's why I do this, to hear you guys say stuff like that. Because then I get, you know, it's like, wow, they're learning, you know. I can die a happy man that I taught some of this stuff whenever that comes. And just again, just to share with the group, we are about being a group. This isn't about me and Lee talking. Kevin is a funded trader at Top Step just recently. Congratulations, Kevin. And so, you know, he's in a position to make a living doing this, guys, with other people's money, which is the way to do it. Always use other people's money. Okay, yes, everybody a round of applause, because that is tough to do. It's even tougher to keep. And I know Kevin has the right mindset now to try to keep it, as opposed to getting bounced back out and having to do another combine. All right, we're pretty much at the 1 hour, which is where I wanted to leave this. So what I always do at the end of every session is I pop back up to my agenda and I see if I accomplished what I set out to do. So let's do that really quickly. Number one, I think everyone knows who we are, and you guys met a few of the Motleys, and I encourage you to use their experiences, ask them questions. That's, again, the whole idea. You know, Lee and I are the hosts, we're the founders, but this is about all of you and interacting with each other. Playbook, the mentality, the whole idea that this is like a sport. You know, we have a playbook, ways that we know make money over time. You know, I just told you the first hour high and low, 116,000 examples, 160,000 examples of the Open 5A and momentum, H-momentum trade, H-momo trade. So again, you can't argue with me that this works or it doesn't. You know, I can show you data till you turn blue. It works. It's a methodology. What setups you choose to do, that will be up to you. I'm just showing you ones that work for me and have worked for some of the Motleys, and for Lee as well. So I hope we went through a good overview, and that was all the intention is, of what a good setup is, what a filter is, how we can make a setup better with a filter, and that example of the first hour, high and low. And again, Anita, I totally get it. It doesn't make sense yet, but I promise it will. It is my mission here to make sure that it makes sense to every single one of you. Otherwise, I don't sleep. And you'll notice by the times of day that I post that I don't really sleep anyway. So I'm around a lot. I'm pretty annoying that way. Okay, so that was the agenda. We did it. And I'm going to hand it off to Lee and see if he has anything he'd like to say to you guys to close it out. You want to tell us a little bit about your session on Saturday, Lee?
Yes, Jeff, thanks for that. So my plan on Saturday is I'm going to kind of really get deep into unfinished business. I mean, unfinished business is one of my favorite reads in order flow. It's not a setup per se, but I like to use it to either get a directional bias for a swing trade or potentially set a target. But most of the material I read historically when I was getting into this stuff, it didn't give me the full picture. And so what I'm going to do on Saturday is go through really some of the subtleties, like the mechanics of how it forms, why it works, how you can look inside those mechanics to understand a couple of different types, and then go through some stats on ES for the past year to show how you can use this as the basis really for some, to underpin some setups. So it's really going to be, from the nuts and bolts, let's understand what it is, why it occurs, how you read it subtly, and then how you can go and use it. And in case you're drinking coffee, Jeff, I've just finished what I was going to say.
Okay, perfect. Thank you. We need like a, Roger Wilco, 10-4. Okay, oh, that's the wrong one. How come that old one is still up? Oh, because it's the one at the other end. All right. Yeah, I wanted to put this back up here. And, if you guys, the best channel to ask questions related to anything we're doing is obviously, yeah, my mic's up on my head. Thank you for pointing that out to me. I had tuned it away so I didn't interrupt Lee. All right, so I just wanted to give you guys, the right way to get in touch with me, anything related to the group is here in the group. Use the chat in the group. Otherwise, follow us on Twitter. We have Trading Research Twitter coming, and I post a lot of stuff in the Surfing the Markets group on Facebook. So, follow there too. You might catch some tidbits that we don't get to here or that we're going to get to a week later here. We'll go in depth here always. We will never go in depth there. And if you want to look at my background or professionally connect with me, there's my LinkedIn right there. I forgot to put that up last time. As I said, I've been involved with a bunch of startups, 26 to be precise, over the last 30 years, as everything from a venture capitalist to all the way down to the first sales manager of a company in 1981. Who was also the salesman and the manager and the VP of sales. So that's kind of my story. If you want to connect professionally, check out LinkedIn, and I'll be happy to chat with you there. And with that, I am going to put this back up, and we're going to call it a day. So thank you, everybody, for coming, and we hope this was a good session. We're trying to make each one better as we go, and we really are excited to have you join us in building this unique community. I think you'll see it's really going to be unique. Thanks again. Trade well.